Joining me now to discuss his outlook for the economy is Seth Carpenter. Seth is Global Chief Economist at Morgan Stanley. Good to see you. So, we got some positive, albeit backward-looking signs on inflation here, but we got Walmart today also talking about passing some costs on to consumers in the future. How do you read this ongoing disconnect between the data and what some fear are coming?
I think your point about it being somewhat backward-looking is exactly right. I read the PPI, and with it, we can sort of infer what's going to go on with the PCE measure of inflation as sort of the last gasp of pre-tariff inflation measures. We really do think once we start to get the next set of data in the next month, it will start to building gradually rising inflation rates because of the imposition of tariffs. Now, exactly where that ends up depends a lot on what goes on with political negotiations over the next few weeks and months. But we do think that today's print was very backward-looking.
And what kind of noise do you expect from these 90-day reprieves now, which are increasingly getting difficult to keep track of? We've got one for the overall tariffs that were announced at the beginning of April, and now this other one for China. Do you expect them to cause a pull forward on some things that affects the data, or no?
So we did see a bit of a pull forward for some of the imports going back for the previous first quarter's data. I think from this point forward, it's going to be a little bit less dramatic. It's not going to show up quite so clearly in the data because at the end of the day, I think businesses now are just confused. There's a lot of uncertainty about what tariffs am I going to be facing and when. When it was before tariffs to tariffs coming, it was pretty easy to know your costs would be going up. At this point, do you really want to order things right now when, in fact, the cost might be lower later or they might be higher later? I think that sort of uncertainty is not great for business. It's not great for spending.
How do you read the state of the consumer, especially considering the student loan impact that we're only now starting to feel?
Yeah, so it's a story of so many forces going in lots of different directions. I think we came into this year with a super strong labor market. Even the last non-farm payrolls print was pretty solid. So I think there's a fundamental underlying component of the consumer that's pretty good. But we are seeing rising delinquency rates at the lower end of the income distribution. And we're starting to see some more burden from things like student loans. And we know we have for a long time seen housing costs be super elevated. So we're getting a bifurcation. Things are slowing down. I think the degree to which they slow down is going to be driven in part by just how much more pain the consumer has to feel.